Hello and welcome to this chart analysis of where I'm going to compare the Dow Jones Industrial Average charts from the tank in 2008 when we went into a recession, and compare it to now. And then at the bottom I'm going to compare what happened at canola in 2008 compared to what's happening right now. So first off, I want to start with the Dow Jones and what it's been doing. Just let me get my cursor around here. This was 2008. For some reason I didn't put the dates on here. What I did is I took the September Dow Jones chart, and then I just overlapped it with a December chart. As you'll see, it's December and September, basically just to show a continuous. This way it's a lot cleaner. There's no real easy way to make one big chart like I did with canola on the bottom. And the time frame from where this starts is basically mid-July, and where this ends is around December 18th. So you see in 2008, starting in here, which was right around beginning of August, the Dow Jones went down, down, down. Had a few up days. Investors were buying back into the market, basically just some profit taking, and then went sideways for about a month and a half, and then it just continued down. And where these red lines right here are very important is it's very similar to what's been going on in the last 12 trading days, actually 13 if you included today. I did this chart up yesterday. And it's when it starts dropping yesterday was 500 points, and what influence it had on the market. It dropped basically about 5,000 points roughly within a matter of 4 months, and I'm not thinking that's going to happen right now. But when I bring up, this is the current Dow Jones chart from September of 2011, and what you'll see here right now is obviously, just like I said, the down days, the 200 point down days. There's a little recoup right here, but you'll see it actually traded down and then came back up, and this is actually today's Friday, August 5th. It closed at 11,444. But you'll see it actually went down to 11,200. If I was to bring up a bigger chart pattern, 10.8 is the next support line. So we're right in support and resistance. Resistance line would be back up around this 11.8. Investors have just lost all confidence with the U.S. economy. It didn't matter if they passed the debt ceiling. They know they're going to be downgraded, and I'm thinking that this is just a case of them preparing for the U.S. downgrade, taking some profit, and hopefully only down to that 10.8 level, and then coming back up. One interesting note is there's a bank in it's called the New York Milan, and it's charging investors now about a little less than 0.1% for all the cash they have sitting in there right now. Basically, they're trying to encourage investors to invest it back into the market instead of just sitting on the sidelines. Right now, there's probably close to $2 trillion sitting on the sidelines. So these two charts right here, let me just get it so it's both on the screen. What these two charts are canola from 2008 and canola right now. Canola was up around $750 a ton, and as we all know, it went down to $350 a ton in a matter of basically from July 31st right through till December 1st. That was huge tanking, and reason I put this chart on with the Dow Jones chart above, if you look at them, there's very little, well, there's a lot of similarity into the trading pattern as traders were taking money out of the Dow Jones. They were taking money out of commodities because they were very long. Obviously, if they ran it up within 6 months to $750 a ton, they were pulling money out of there. What's different in this chart below here is November 2011, our current trading month, and if you were to take this chart and put the current Dow Jones chart on here, you'll notice as we went down in the last 13 trading days, canola's stayed relatively flat. It's had its up and down days. What that's basically telling us as normal people is the traders aren't long in commodities. Corn actually went up for the week once you watch my weekly video analysis, and they're getting prepared for a shortage in corn again in the States. So there's a few similarities, but not very many like 2008. I'm not saying canola is going to go from this high here of $600 a ton in May down to $280 a ton, because it's just different economics happening right now. But I am watching what's happening with the Dow Jones, and if we break this 11,000, no matter what the canola price, I'll be recommending some fall pricing, likely to get us up to that 30-40% priced, and then just ride it out. At least we'll have enough price that if canola does go down to the low 500s, it's going to come back in the new year easily, and that's where we'll continue doing some pricing. Thanks for watching, and talk to you again.